Johnson. Sorry for the technical difficulties here this morning, and I know we've cut quite a bit into our time, so I'm going to unfortunately run through this pretty quick. But we're going to talk a little bit about why you need insurance and the different coverages that are available to you. First, we're going to talk about why you need insurance. This first bullet is you need insurance to protect the assets of the PTA and the personal assets of your members. And when I say this to people, they ask me, what do I mean when I say protect the personal assets of the members? And I have to explain to them that if there's a really bad accident at one of your fundraisers and the person who gets injured decides to sue, well, the attorney for that person is going to name not only the PTA, it's going to name everybody involved in the event. And if you're having the event at the school, it's going to also name the school in the lawsuit. So this insurance is really important to protect not only your PTA, but your personal assets like equity in your home, your 401k, savings accounts, things like that. Next bullet says, anyone can sue anyone for any reason. They usually do. So this is where we get the term frivolous lawsuits. So even if you think you're running a really, tight ship and nothing can happen, well, it's just good to have the insurance because you never know what might happen. Number 3 is PTAs are not immune from liability. A lot of PTAs will tell us that, because they're a charitable organization, because they're a nonprofit, because they've incorporated, then they're immune from liability, and that's not always the case. It helps, if you're incorporated, it helps that you're a charitable organization or nonprofit, but that doesn't guarantee 100% that you couldn't be sued and you wouldn't be immune from liability. This next one is a really big misnomer in insurance world, and that is typically school insurance does not cover PTAs. We have a lot of PTAs that tell us they don't need insurance because the school covers them. So our suggestion is that they make a list of all of their activities, and if you have a carnival, don't just say you have a carnival, but under carnival put down the activities that you have at your carnival, like a bounce house, inflatable slides, dunk tanks, pony rides, all those kind of things. And take that to the school. Probably should sit down with the risk manager at the school and show them the list and say, if someone gets hurt at any one of these activities, would the school insurance cover you? And what we find is 99% of the time there is no coverage, or there's very, very, very little coverage. And the last bullet point here is, it's a good idea to have the insurance because the insurance pays attorney fees to defend you. The general liability policy is just over $100 a year. And, we typically pay attorneys $300 to $500 an hour. So $100 investment in the insurance is a good investment to help pay attorney fees if there happened to be a lawsuit. So now let's talk about the kinds of insurance you should consider. And there's really 4 policies. General liability policies, officer's liability, property insurance, and then the fidelity bond. And the general liability has 2 endorsements. Endorsements mean it has 2 coverages that you can add to the general liability. So we're going to talk about each one of these just real briefly. First, the general liability is really simple. What does the general liability protect you from? It protects you from lawsuits, from bodily injury and property damage. So if you're having a carnival and somebody gets hurt, and there's a lawsuit, then the general liability covers that. If you're having an event at the school and you damage or destroy school's property, again, that's a general liability claim, and the general liability policy will step in to repair or replace that property. Who needs protection under the general liability? We kind of touched on this. The named insured, which would be your XYZ or ABC PTA, but also all the members, volunteers, and any employees if you have employees, because it's important to protect, again, the assets of those people. Policy limits. We get asked all the time, what sort of policy limits should a PTA carry? We recommend $1 million. We've been doing this for 31 years, and our largest lawsuit to date has been just over $600,000. So we feel very comfortable that $1 million is adequate. You can buy higher limits if you would like, but our recommendation is $1 million. So what kinds of activities could cause you liability. This is just a short list, but a list of some of the more common activities that PTAs do. So, roller skating parties, dances, carnivals, graduation parties, swim parties, after proms, fun runs, your monthly meetings, bazaars, dinners, book fairs, bounce houses, babysitting, and food sales. So these are all things that you might be involved in that could cause you liability that would be covered under your general liability policy. So let's talk about one of the endorsements to the general liability, or one of the coverages you can add to the general liability, which is extended medical payments. What's extended medical payments? Extended medical payments just provide for medical payments for injuries sustained at one of your events. Okay, so the difference between the general liability and the medical payments is general liability covers you for lawsuits, and medical payments just step in and pay medical bills when there's not a lawsuit. A lawsuit hadn't been involved. And why is it important? Well, we find that if you can pay the medical bills of somebody who's injured, then they're less likely to turn around and file a lawsuit. What limits should you have? It really depends on your individual PTA. If you just have monthly meetings and you don't have any fundraisers or a carnival, then you probably don't need this. But if you're very active and have lots of fundraisers, then you probably should consider limits like $10,000, $25,000, or $50,000 worth of medical payments. The next endorsement that you can add, or the next coverage you can add to the general liability, is called media liability. And again, this is liability. What does it do? It protects you from lawsuits resulting from social media. And what sort of things are you at risk at with social media? Well, posting photographs without getting a release, or using trademarks and logos without permission, posting misrepresentations of information, making confidential information public. So these are all things that you might do or could do that could cause you some liability. The types of social media that are covered are your PTA website, LinkedIn, YouTube, Twitter, Instagram. These are all types of social media that if you did inappropriate posts and someone took exception, they would be covered. So next, talk about officers' liability. Again, this is a liability policy. So what does it do? It protects officers from lawsuits resulting from wrongful acts or inappropriate actions. And some examples are, inappropriate use of organizational funds, wrongful acts, misleading statements, negligent acts, discrimination, not following your bylaws, misrepresentation. So this is really an important coverage for officers because you're running your organization, you're making decisions and policies, and somebody could take exception with something you do. Just a quick claims example here is that we had a PTA that was having a monthly meeting. They thought one of their members might show up and get very disruptive, maybe even get physically violent. Called the police. They explained the situation. The police said, well, no problem. We'll show up. The person starts getting disruptive. We'll just escort them out of the room. Well, that's what happened. A couple months after that, there was a lawsuit filed alleging that this person's civil rights had been violated. Well, because they felt like they had as much right to be at the meeting and voice their opinion as anybody else. Okay. Is this a general liability claim? No, it's not a general liability claim because the police didn't rough up or injure the person when they were taking them out of the room. But it's an officer's liability claim because, again, someone took exception with an action that the PTA took that they thought was inappropriate. Next, let's talk about personal property. What does a personal property protect? It protects your personal property owned by the PTA from loss due to damage, accident, or natural disaster. So these are just some example of some of the things that you might own as a PTA. Popcorn machine, snow cone machine, raffle items, school store supplies. A lot of PTAs don't have some of these things, but most PTAs buy fundraising merchandise. And when you take possession of fundraising merchandise, from the time you take possession of the merchandise to the time you distribute it, that's in your possession. You're responsible for it, and the property policy would cover that. An example of a claim we had, and unfortunately the PTA didn't have this policy, but they bought $10,000 worth of wrapping paper. They put the wrapping paper, they stored it in a portable building, and the kids were going to come by on Saturday morning, pick up the paper overnight. There was a really bad thunderstorm. The building leaked, and most of the paper was either damaged or destroyed. So they had to buy a second set of fundraising wrapping paper for another $10,000. They had that fundraiser. They raised $20,000, and they took the $20,000 and paid off the two $10,000 orders of wrapping paper. So for, again, this policy is just a little over $100. For a little over $100, they could have filed a claim, got their money back, and not went through all this time and trouble and not benefit from the fundraising money. The last policy I'm going to talk about, and this will wrap up my presentation, is fidelity bond. It used to be our most frequent claim was general liability. It usually slips and falls, and we would pay a few $100s under the medical payments for medical bills, or if they went to the hospital, we'd pay some hospital bills. So that was most of our claims, our most frequent claims. Unfortunately, today, fidelity bond claims our crime claims are our most common. What does this policy do? It protects your cash or money against embezzlement, robbery, or theft. And the question here is, who should be covered? Kind of like the general liability, everybody needs to be covered. If you go down to your local insurance agent and you buy a bond, more than likely they're going to sell you what is called a position bond. So you're going to cover a position like the treasurer. Well, that's fine if the treasurer embezzles money, but if the president or fundraising chairman or anybody else takes your money, then there is no coverage. So you want what's called a blanket bond, which is the type of bond that AIM offers. And the bond really just insures your money from anyone who has access to the money and takes it for their personal use. I want to talk about the fraud triangle because this is what we see in most of our claims. Typically what happens, I'm not picking on treasurers, but typically it's a treasurer. It's usually a stay-at-home mom that has 2 or 3 children, and she's very, very involved with the school and the PTA. She's a PTA treasurer. Dad loses his job, and if they had any savings within 2 or 3 months, they go through their life savings, and they're trying to figure out how to make a mortgage payment, keep the lights turned on, and put groceries on the table. And so they get in a very desperate situation. And, the motivation is, I need to pay my bills. The opportunity is, well, I'm the treasurer and I got access to the PTA funds. And the rationale is, well, I'm not stealing money. I'm just going to borrow the money. And I'm pretty confident Dad's going to get a job just any day now. We're going to take his first paycheck. We're going to put the money back in the PTA account and everything will be great. Well, if that's what happened, we wouldn't have any bond claims. But what happened is a month goes by or 2 months goes by and they need more money. And every month they take out $2,000 or $3,000. And this usually goes on for about 6 months. And then finally it surfaces, and they're missing $15,000, $16,000, $17,000, $18,000. So how do you protect yourself from this? Well, the best way is this first bullet that says, have someone who does not have check signing authority reviewing the bank statement on a monthly basis. So if everyone knows there's a second pair of eyes or someone else is looking at, then people are less likely to take money out of the bank account. And so this is required of the insurance. Most insurance companies require you do this. So make sure you're doing it, because if you're not doing it, you have a claim that it voids your bond insurance. But have somebody looking at it. If you had a $10,000 fundraiser, then this person should be looking for a deposit of $10,000. And obviously, if the deposit doesn't show up, that's a red flag. Look for checks being written to a mortgage company or grocery store or pharmacy, those kind of things. So it's just a really, really, really good way to protect your money. This next one, which is required by Wisconsin State PTAs, conduct an annual audit. Again, if someone knows that there's going to be an audit committee or a qualified accounting person, bookkeeper, that's looking at the books, then they're, again, less likely to take money. And then a few others is, never take money home. Always have 2 people count money, sign a receipt. Never sign a blank check, deposit money daily, pay bills by checking, never cash. And this last one's important because it's become more and more frequent, and that is double verify email requests for monies from other PTA members. It's becoming very, very common for the treasurer to get an email from the president saying, I need you to send $500 or $1,000 right away. And sometimes the treasurers do that and find out later it wasn't the president, it was somebody else that was fraudulently taking their money. So double check emails when people are asking you to send money. And then this last one is really important. How much bond coverage do you need? Each PTA needs to determine their own level, but our best practice is match your bond limit with your gross annual budget. A lot of PTAs will tell us that, well, we never have more than $5,000 or $6,000 in the bank account, so why would we have more than a $10,000 bond? Well, in my example of the fraud triangle, if your annual budget, if you raise $25,000 a year or $50,000, whatever that number is, you have $25,000 flowing through your bank account over a 12-month period, and that gives somebody an opportunity, to take $25,000 or part of that money over that period of time. So, pull out your annual budget. Look how much money is in your annual budget, and then look if hopefully you have bond coverage. Pull out your bond coverage, and if you can't find it, but you have coverage with us, we'll give us a call and we'll look that up and we can tell you what kind of limits you have. So real quickly, that was my presentation. Please make note of our 800 number, 800-1-800-876-404, or our email address, aim@aim-companies.com. And email us or call us with any questions that you may have. We have people answering phones 24/7. So whether it's a Wednesday night at 10 o'clock at night or a Saturday morning at 10 o'clock in the morning, you can call us or email us and we'll get back with you right away. So thank you for your attention, and I hope the rest of your conference goes well. Thank you.
Thank you so much, Elgin. We appreciate you coming and giving us all that information. So so that way we can make better choices and make sure that we're all covered, because nobody wants to have to not only lose their fundraising money, but have to shell out to pay for the cost of it too. So for the cost of the materials. So we appreciate you, and thanks so much. You have a great day.
Right. Thank you.
Bye-bye.